Hello, today is March 10th, 2018. My call prior to Friday's open was that I was looking for a pattern with an early low and a late high and a tendency to rally throughout the day. I said that the response rather to the jobs report would dictate the day's call, and I was not making a directional call. There was a MEJT target at 2702, but the gap in the undesired direction killed that before the open. We'll add it to the list, expected to print at some point. We get to cross two old targets off the list. Notice how they are support resistance levels that were set way back. During the day, MEJT says this rally is false, gives us a target of 2775.28, most likely to print on Monday. There's also a sell signal described on page 120 of my book. The signal says at sometime today we should drop from 8 to 10 points. It doesn't say from where such a drop begins. The rules were devised back in 2002. At that time, that was a pretty significant move, about 1% of the index. Right now, it looks like a blip, but the thing is the track record's quite good. In nearly 16 years, it only failed twice. Once we only got 7.5 points. Didn't fail by much. Other one, I think we got 5 or 6. So with a high degree of confidence, we should see a significant drop at some point, if 8 to 10 points significant. And there's a good chance we see this lower price also. Well, usually rallying all day, particularly on a Friday and closing near the high, carries through into Monday's trade. If it does not, and particularly if we gap down sharply, it tells you something else is going on. It would be a sign of weakness. We do have a pattern with an early low, I believe, Monday, but that doesn't preclude us from gapping up first. So what are the chances that that's going to happen? We have some conflicting signals which can only be resolved if Friday's move is reversed quickly. If it isn't, then one of these rules is going to break. There is some resistance higher, but it's hard to see us stopping here if we go up. We have a 5-wave move down, a 3-wave move up, correcting it. According to Elliott's rules, this high should hold. Conflicting with that, unless this is reversed promptly, is we have a break of Tom DeMark's TD trend line. The sustainability criteria are met. It predicts we go over this line by at least as much as we have gone under it. Now the line's declining, but unless we decline without going under it for a long, long time, it pretty much implies that we're going to go over this high. This move can be invalidated if we gap down, and particularly if we do that and promptly go under this line. So what are the chances of that happening? Well, we do have a Hobson close at the high of the day plus a wall into the close. So we know there's at least a 50-50 chance. There's a 50-50 chance of gapping down. We also have lower targets. There's also a wave count compatible with this being the end of the structure. This is the count I had. Here's your gold A, gold B. If you measure with this blue Fibonacci grid, you'll see that wave C is equal to wave A. If you then look within wave C, you have your ABC. You set A at 61.8%, and that's the target here. So if we stop here, there's at least a wave count that's compatible with it. If you look on a larger scale grid, we have 1 ABC, and this too would correct 61.8% of the prior decline. It's possible to relabel this as an A, B, C for wave A. I have a B correct 61.8% of A, and then start wave red C down. So, Monday's pattern, I believe, is one with the early low. We have lower targets. My price target clearly failed, but if we break out to a higher high, which is reversed immediately and does not stick, it's a variation of a 2B top, in which this is the real high and this is just a false move. This is a price I would like to see stick as the high. As others have pointed out, it's a 9-year anniversary of a prior low and 18-year anniversary of a prior high. We'll make a nice pretty picture. But in order for that to happen, we should gap down Monday and promptly reverse Friday's strong rally. If that happens, I think the wave count is still intact, and the next move should be significantly down. If we keep going up from here, DeMark's rules indicate we're going to break out to new highs, and the whole count I've been using falls apart. So for that reason, I think Monday's action is going to be critical. We'll see if this high holds, advances, or reverses promptly, and that's going to tell us what's going to happen. That's today's call.